Hi, my name is George Tagnino. I'm the editor of the Peter Dack Portfolio. What I like to do today is to show you the real estate cycle is is one of the many cycles that are within the overall business cycle, but it's very important because it gives you an idea where many markets are going to go. Why? Because the real estate cycle is what is called a leading indicator. Let me show you what I mean. The housing market is an important leading indicator of the economy. And as you can see from this chart going back to 1970s, every peak in housing starts is followed by a recession here and possibly here in the 20s. So let's see why. One more detail about the housing market. The red line is the home prices. And as you can see, home prices accelerate, go up faster when housing starts rise. Why? Because there is demand for housing, housing prices rise. So they're very highly correlated, both on the downside and on the upside. Right now, housing starts are declining, home prices are declining as well for several reasons: affordability, low income, and high interest rates, of course. But it's important to put the real estate cycle into a business cycle context. This is the business cycle. This is when the economy picks up. Why? Because in phase four, interest rates, commodities, inflation came down, purchasing power has improves, and consumers start buying again. Here, growth rises above potential, and then as a result, interest rates, commodities, inflation start rising. Here, business profits decline because of rising cost. Consumers purchases slow down because now purchasing power is decreasing due to high interest rates and inflation. And of course, consumers refrain from buying and borrowing until interest rates and inflation derive to the point where purchasing power is reestablished. Now, in all this, what you expect is during phase two, as interest rates rise, this is when you see the real estate cycle peak, because there is a point where interest rates are too high that consumers cannot buy. Then interest rates decline until when? Until interest rates decline to the point and prices decline to the point where consumers can afford to buy again. And then this cycle starts all over again. Let's see what the data are saying. This is another way of looking at the cycle, the real estate cycle. Interest rates decline, and at some point they are low enough to encourage consumers to buy. So housing starts start rising, but at some point there is an overheating effect. Business grows too fast, demand is too strong, that inflation and interest rates are rising. There is a point when interest rates rise to a level such that housing starts peak. And housing starts will decline until when? Until interest rates have declined to levels that consumers can afford to buy again. And this is what the relationship, the lead lag relationship between interest rates and inflation. So, and housing starts. What you have to notice that a decline in interest rates precedes a rise in housing starts, and a rising in housing starts precedes a rise in interest rates, and a rise in interest rates precedes a peak in housing starts. This is a classic relationship between leading and lagging indicators. And this is how the actual data look like. The blue line here is housing starts, the leading indicators. You see they lead by several months, a year, sometimes even more, a recession, and they lead by a few months instead the expansion. And what you see, the red line is interest rates, is the 30-year mortgage rates. And as you can see, is housing starts rise, the economy picks up, then interest rates rise, the red line. You see the peak in interest in housing starts, they decline, 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 until when? Until interest rates, as I mentioned before, fall down deep enough that consumers can eventually again afford to buy again. At some point, interest rates start rising, and housing starts peak. When will a cyclical peak, when the housing starts, will bottom? Well, like in here, they will have to decline long enough. Consumers are not buying because of rising high interest rates. So they will wait for not buying, meaning therefore the housing starts will keep on declining until when? Until interest rates have declined deep enough to make housing affordable again. So what am I saying here? Well, interest rates have a long way to go on the downside for housing starts to pick up again. Again, look at this example and what I just said before, also in the previous slide. Housing starts decline, 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 decline. Interest rates stop rising. No, consumers are still not buying. So housing starts decline because there is no demand. And now interest rates start declining, but it's not enough. They're not buying. So housing weakens more and more and more until when? Until interest rates have declined low enough for consumers to buy. So if history, and I believe is going to repeat itself, these interest rates here, which are now close to 7% on the mortgage rate, have to decline much, much more for housing to become affordable again. As I mentioned in other videos, the stock market is also a leading indicator, meaning what? That the stock market, this is the blue line here, declines ahead of a recession by several months. The red line is, of course, is housing starts. And what you see is the same relationship, the stock market and housing starts, they have the same relationship within the business cycle. In other words, they peak almost at the same time. Actually, the housing starts peak several months, sometimes years before the stock market. Why? Because they're all both are leading indicators, meaning what? A rise in interest rates and inflation creates a negative environment for earnings and therefore creating a negative environment for stocks. Rising inflation and interest rates have the same effect on housing and consumers' purchasing power. Therefore, the housing starts decline. So the two tend to go peak not at the same time. Usually the housing markets, like in this case here, peak before, several months before. Even here, it peaked, as you can see, almost a year before, more than a year before the stock market. So weakness in the housing starts is a negative sign because this means that the rise in interest rates and inflation has damaged consumers' purchasing power, meaning that they are going to retrench. It will take time, but they will stop buying and will refrain from buying until interest rates and inflation have declined to the point that their purchasing power is reestablished. So here the stock market is going up, but housing starts are telling us that there is a big problem in the system. And this is why it should be considered as a warning sign. What I showed is that housing is an important leading indicator, and it reacts to all the leading indicators in the business cycles, like the stock market, or for instance, another one would be durable goods orders. They all react to the same trend in the lagging indicators, which is interest rates and inflation. And housing starts, what I've shown, is a leading indicator of recession, and the rise in short-term interest rates and in long-term interest rates and inflation decrease the purchasing power of consumers. Therefore, housing starts decline because demand collapses. Demand increases only after a prolonged decline in interest rates and inflation, which is a typical event that takes place in phase 4. Housing starts and the stock market go hand in hand, with housing starts leading the stock market by several months, sometimes a year and a half. Thank you very much for following this video. As always, I do my best to give you some information that helps you guide your investment strategy. Clearly, the trend of housing starts and the trend of interest rates and the level and trend of interest rates is not really favorable to an aggressive investment strategy. For this reason, as you know, in my publication, the Peter Dack Portfolio, I've been recommending just stay very conservative. Well, thank you very much for following this video, and I hope to see you really soon. So long and have a wonderful day. Take care.